Well, g'day there, everybody. Thanks a lot for joining me in this weekend market update. It has been quite some time since I did recap the markets as at the weekend. I generally leave that for that Pivot Point Pro analysis class, which I do each and every Saturday. That link, or at least that video, was about 1 hour and 11 minutes. That is up on the website at the moment. So be sure to check it out if you enjoy this analysis and really this candid conversation that we are going to have about the market maybe over the next 10 minutes or so. But really, again, dating back to the last public, YouTube address that I brought out, it was on Wednesday. And we were sort of floating the idea that maybe the market was moving into a little bit of a continued stall, whereby we did see, all three of the US market indices largely move sideways in that sort of stair-step sort of continuation type of pattern. Now, we floated the idea, whether or not, well, potentially we could essentially come all the way back down and retest that rising area of support. If I can color coordinate this and move this into the ascending triangle on my screen, a little bit of an ugly illustration, but here I am using my pen drawing tool with the mouse. But again, we were speaking about the insurance policy, and the insurance policy being the contingency order, whether or not you wanted to jump into the diamonds or the SPYs or the Qs, which has been priced just above the past resistance areas to trigger you back into the market, or to, again, build on those already existing positions on the Dow Jones Industrial Average. This was at 27,062 points. Funnily enough, after that YouTube update on Wednesday, here's Thursday's candle. We essentially blew straight through it, and then we saw a very nice long day engulfing, long day Morobozu candlestick on Friday, whereby we closed up 243 points. If I go out to the weekly chart on the Industrial Average, we closed up over 400 points. What's most important is that we have this lower wick, whereby the dynamic has shifted. And again, I started to speak about this 2 weeks ago in Pivot Point Pro, whereby what we've essentially been doing is that over the past 1.5 years, we've come on up a multiple series into this resistance area, whereby we have naturally failed. And we failed right up until really this week just passed. And what the test was essentially the breakout, the pullback being the little pullback that we saw on Monday and Tuesday, and then the continuation to the upside that we saw Wednesday through Friday, at least on the Dow Jones Industrial Average, this little move just here. So again, we haven't been short-term bullish on the market. We have remained long-term bullish on the market, understanding, that the market itself has been in a long-term consolidation, whereby a lot of people have incorrectly called this some form of a market distribution, i.e. either a triple top or even that of a head and shoulders macro reversal. I cannot count, on two hands just how many analysts that I've seen and even articles wrote about how this is some form of a macro topping pattern, through the entirety, leading up to the sort of Q4 bloodbath, whereby we closed out of our positions over here and we actually started going short. We have understood that the macro primary trend is still in effect, and as you can see, these green triggers have been an understanding that we are in a form of accumulation still, whereby we've been looking for price to ultimately get all the way back up into resistance and then to crack and break out and then move into, a trend that we've been calling for not only to continue for the entirety of 2019, but most likely it's going to continue into the majority of 2020. So again, a lot of this market chop over here, though it has been tremendously profitable to trade, both on the short side in Q4, and then really since all the way down here on the Dow Jones Industrial Average at 23,432, that was our first bullish entry on the market to go long. On the S&P 500, it came all the way down here at 2,525. You can look back retrospectively. You can see all of these past triggers on the upside. We've understood that there has been an opportunity to profit off from, again, the retest of this primary bullish trend line, the successful holding of this area, and then to accumulate, positions, longer term positions dated, if you're trading options, into 2020 to front run what will inevitably be the breakout. Now, again, we've speculated, and we're never going to get this perfect. I'll put my hand up and say I'm the first one to admit this, that even through this analysis here, calling for potentially, even as recently as 2 weeks ago for another wave rotation back down, we've still sit here unequivocally, or I've sat here unequivocally and said that no matter which of the two, options the market is going to take. In fact, I think that was a title of a public update as well. Both result in higher equity prices. Okay, and because of that, the majority of people in that analysis class have not only been accumulating over the past, or since June anyway, of this most recent acceleration, the continuation of the trend, most recently breaking out again above 3,000, which was a huge milestone. I know a lot of people who front run this trade personally, and myself included, whereby we've been buying actually SPY positions at the $300 strike on the SPYs. But a lot of people have been accumulating still the positions prior to the breakout above 3,000 or prior to breaking above 2,950. And the good news is for people who've been listening, and I say this with all due respect, and again, I still have sort of the lingering sort of sickness that I had even on Wednesday when I brought you that weekend, or sorry, not the weekend, but the afternoon market address, is that for those people who have been accumulating and they've been sort of disciplined and they've been very patient in their approach to the market, the good news for them right now is that this period in time, this moment, this window that's probably going to last upwards of 9 months, maybe even longer, this is the payoff period. This is the period in time, and it's already begun. Okay, it really began 2 weeks ago, at least for July, when we essentially broke out and we've continued. This is the part whereby all of these past positions, right, options that we've really pushed out into the future with option expiration, whether or not they're in the money or out of the money that have now moved into the money, this is where these positions, right, are going to bring you tremendous returns. If you simply hold on to them and you understand now moving forward that the exponential moving averages as a technical swing trader are going to be your best friend in this market, and you understand also that the dynamic has shifted from that of a range-bound market, and this is what I've been really doing my best, right, in good faith to bring you even in these public YouTube addresses, is that the market dynamic has now shifted from that of a range-bound market, right? Whether or not you're looking at this on a daily time frame, a weekly time frame, or a monthly time frame, right? A market which is relatively choppy, just moving back and forth between differing areas of support and resistance, to now a dynamic whereby the market itself is trending, a big difference. So what you don't want to be doing in this current market environment is jumping in and jumping out and jumping in and jumping out of trades that are simply trending. This is the part whereby we've accumulated the positions. We haven't distributed them. We've certainly been accumulating them. You can go back and listen to all of the videos that I've made publicly here on YouTube. All right, and I encourage you to have a look into that pro class. I seriously mean that. If you want to learn more about market analysis and how to do this stuff professionally. But for those people who've been accumulating and understood that the market has still got higher to go, in fact, I do believe, personally speaking, that the S&P 500 is going to hit 4,000 points. And I do believe also that the NASDAQ is going to at least hit 10,000 before the end of this bull market. Understanding that the markets themselves have still got 25, if not maybe even potentially 30% higher to run. And you've got adequate time with those options. And you've already built the base position already. And the markets are only just breaking out. That's why I'm sitting down, if you haven't already realized, to actually recap this with you, because it is such a critical moment in the dynamic, the sentiment, the collective psychology of market participants. All right. Stuff that they won't tell you about in the news. All right. Or at least on the legacy sort of media, the business channels at least. This is the beginning of what's most likely going to end in a parabolic sort of melt up in price. Something that defies all belief, that's rather, or completely, I should say, irrational. And you're going to want to, as my phone goes off, right, have a vested interest in the markets moving higher to some degree if you haven't already done so. And I want you to have enough time to take advantage of the trend continuing further than what you may originally believe that it has the potential to run. That's really the reason for this weekend market address. I'm not going to go into the market analysis. I just wanted to tell you that the dynamic has shifted. It shifted from a range-bound market into that of a trending market. And you shouldn't be looking to enter and exit very acutely in and out of positions. Instead, you should be wanting to hold and originally already have accumulated those positions. And now you're going into the payoff period, which is the best part of technical trading. And it's really why we all trade the markets. We want to ideally trade those trending types of markets. However, we've had to wait 1.5 years, okay, for the markets to essentially move into that trending state. And I've already said this on a number of occasions. I'm not sure if it's publicly, but certainly privately in that Pivot Point Pro class. I'm just going to say it right now. A lot of people are calling, obviously the market is rose already over 20%. They're saying that, look, that's as far as this market is going to go. In the calendar year 2019, I couldn't disagree anymore. The reason I say that is because really we're only starting to push off above what is essentially zero if you go all the way back to September 2018. So again, if you want to start essentially really the calendar year to date returns, you have to begin them at 2,950 because we've already been up at these past areas, right, in the market itself. Technically speaking, yes, you want to measure it off from about 2,400. But if you're looking at the chart, you understand that we've already mapped this ground up until most recently, about 1.5 weeks ago, where we started to push above 2,950. Now the clock is beginning. And that's the really exciting part of these markets. It doesn't matter what you apply it to, whether it's the Dow, the Nasdaq, the S&P. One thing which is different is that we do have agreement whereby we see all three of the US markets pushing to new all-time highs. Yes, I understand, and please don't comment below, that the Dow Jones Transportation Average, it isn't obviously pushing to a fresh new all-time high at the moment. I understand that, okay, I do. We've spoken about that as well over the weekend, but the first time in a very long time we've seen at least the Nasdaq, the Dow, and also the S&P 500 push to fresh new all-time highs. Now, I understand also, according to Dow theory, we should see the transportational average follow, or at least lead, or at least confirm that of the industrial average when one of these market indices breaks to a new all-time high. And yes, I understand that it hasn't achieved this yet, but I do believe it is going to achieve it ultimately, even if it takes a little bit of time or if it is lagging a little bit. The good news is that we've got a nice long day Morobozu candlestick on Friday, and potentially this is going to be, right, the little period in time whereby the transportational average hopefully catches up to the industrial average, whereby we then see, right, the transportational average actually print, right, and a new all-time high as well. And then you've pretty much got everything necessary to substantiate what at the current juncture is already a pretty legitimate breakout. Okay, whether or not you want to trickle this through to a bunch of individual trades, I'm going to do this very quickly for you because there'll be, first of all, the golden rule is, and I keep repeating myself, a trend is assumed to be in effect until it gives us, what? Definitive signals that it has reversed. That's why when we go through the market analysis, we want to, or at least we draw in these lines of support and we say to ourselves, well, look, we don't want to trade bearish technically on a macro level unless we start cracking below critical support areas. That is the golden rule, or at least obeying the golden rule, whereby you get a technical trend change. It's one thing, for instance, to speculate that you're in that of a sort of a triple top, and yes, I understand that. It's another thing to wait until you get the confirmation of the break. And the confirmation of the break, for those people who are looking for the triple tops, or the head and shoulders, whatever it was, at an absolute minimum was down here at 23,500 after this low over here. So you're talking about the period of February onwards of this calendar year. Never came, never happened. All right. So there was no reason to actually, again, on a macro level, assume that the trend had changed. Because of that, we have been absolutely cherry picking a bunch of lovely trades. I'm just going to go through a couple of them. Not to gloat, but just to be very sincere in our approach to the market. Most recently in Apple, 171, 175, 178, 188, 198. We started to get, right, a little bit shaky on this trade around the psychological round number of 200. Dotted line means we're not doing it. Sold out at 213. There's the May part of me, a little bit of a pullback in the market, which was essentially creating the hypothesis of that ascending triangle, which I've been delivering when it comes to the market analysis. Once we saw the reaction off from that and the continuation of the trend, we've had 184, to a lesser extent 192. Personally, I didn't take that, and then 197 and 203. Okay, really nice trades there on Apple. Have a look at Amazon. 1828, 1896, 1977. This goes back to 1681, 1787. 1835. These are all long trades. They're not short trades. Every single one of these trades is long. Okay? Boeing Airlines. We haven't really triggered on this trade recently. And when I say recently, I'm talking about the past 3 or 4 months. Okay, yes, we are in this above 361 and 363 at the moment, largely unchanged, but we started to accumulate positions in this back in 329 before we saw, of course, that really ugly, unfortunate news coming out, or at least pertaining to Boeing Airlines. Okay, Baidu is in a little bit of a bear market, so that stock's a little bit different. Caterpillar most recently, 127, 129. Okay, the target was 139. We hit that on the first trading session of July. This is not a re-entry at 135, although it sort of looks like it. It's just the original, positioning of the continuation trade up to that target. I just wanted to make that very clear. Google, all right, 1082. I actually made this analysis public too. You can go back and have a look at this. It was after this gap. It was probably during this period over here in about mid-June, talking about the exhaustion gap, coming back up to close the gap, pulling back down, creating a higher low, and then creating the neckline upon which the majority is going to say, it's a reversal, right? We've already been front-running this from 1082. 1,109, 1,132. It's very rare for me to sit down and actually spend any of my time speaking about winning trades. It's just really not in my DNA, but here we are anyway. And the reason I'm doing this again is because I want you anyway to differentiate between that of a range-bound market and that of a trending market. Huge difference. This is what traders dream of. Okay, what we have just essentially printed within the past 1.5 weeks gives you a window of opportunity if you want to sort of swallow your ego for those of the sort of the market bears out there and just say, look, I was incorrect. Just take it on the chin. Hopefully you're not in any short positions on the market. And just say, look, if I'm going to start clawing back any of these losses whereby I've been sort of shorting the market incorrectly, now's the time to go long, because if you don't, you're going to miss some huge profits that are just naturally going to trickle in day after day as the market drifts higher. You've got Disney again, 137 most recently, 143. We've got a continuation entry up here. We spoke about this over the weekend. I've recapped Google. COP, again, 60, 61. This is just building, very similar to Google at the moment, but it hasn't broken out. Again, just going through this list, we've had IBM, 132.40, 135.22, 136.86. Target was 142. We're in the sort of the danger period right now. I was calling it sort of the radioactive area. Don't go near IBM if you're looking at this. And if you're not in pro, obviously you're not privy to the information, get into it, but don't go near IBM. Do not even sort of think about trading IBM on the long side at the moment. Very reckless. Microsoft, we only added into the list essentially last week. So this is the second week of recapping it. We have earnings. A lot of these stocks, by the way, are moving into earnings. And the real sort of one stock that has been a little bit sleepy anyways is Netflix, which has largely just gone sideways, as you can see on my screen. So again, I just wanted to sit down however long I just spoke for, candidly, just to speak about the state of the markets. I want to honestly cordially invite you into that analysis class. By all means, send me an email as well, success@pivotpoint-trading.com, but you don't have to walk through analysis alone. That's the main thing. You don't need to walk through this alone. And again, think about the market with the understanding that you're going to see trending prices at least for a number of months, and with those previous aforementioned sort of targets, right, of 4,000 on the S&P 500, I think that's a very reasonable target. And the NASDAQ being up at 10,000, they sort of overlap in percentage terms as well. Not obviously identically from where we're currently trading, but they are some pretty decent psychological round numbers, and it makes a lot of sense. That gives you, right, a lot of nice, pardon me, that wasn't great English, but some really nice risk and reward ratios, okay, when it comes to options. Think about it. That's what I'm going to leave you with. Risk and reward through the eyes of option contracts with those two targets for the NASDAQ and the S&P 500, given where we are currently trading at based on where your stop needs to be placed. You are getting ridiculous reward to the risk on the trade. Very rare you get this on a market, and it's being offered now. It's not going to be there forever, right? But the market is offering it to people who realize it right now, but for also people who've been realizing it for just a little bit longer back over here during this period of it, and also for those who've been accumulating, right? Understanding it's a consolidation, it's an accumulation, and we're going to go higher. That's exactly what we're doing right now. Okay, so enjoy the rest of your weekend, or what remains of your weekend, everyone. I'll be back with you during the week for some more market updates. I'm still trying to recover and allowing my voice anyway to sort of rest, recuperate, and to sort of shake this chest infection. So my apologies if I'm not very clear. I may have got a little bit of a head cold, but regardless, I'm going to take it easy for the rest of my weekend. I wish you all a nice weekend, and hopefully I'll see some of you in pro, and hopefully I'll receive a few emails from you as well. All the best, everyone. James signing off on behalf of Pivot Point Trading. Farewell.